This is the Friday, July 21st, 2017 version of the Market Plus segment. Joining us now is Elaine Kub. Elaine, welcome back.
Good to be here.
You know, when we finished the discussion on the program, we were talking cattle, and we were really talking in a little detail about the 116% of last year placement rate and how you were not shocked. You've seen these calves going through the sale barn. You know ranchers as a cattle producer. You've seen these coming off the pasture. What does this mean for the Dakotas long term?
Well, I don't know how. You know, I think that there has been, to the degree that anybody can keep their herd in place, they keep it in place. And so it's really hard to say, you know, inventory-wise, like how the herd has changed. But to talk about the actual, you know, heifers and steers that should have been on pasture that have been placed into feedlots, we definitely saw that coming through June. And we're still seeing this demand. We're still seeing lots of buyers in the auction barns trying to find these cattle still because they like the idea of putting them on corn. And so prices, you know, that's what we were talking about. Prices really haven't fallen apart, even though there was this surge. There was a surge in June, and now it's kind of dried up. The play has been made, but people are still eager to buy these feeder cattle.
And here's the thing, watching the cash sale prices of feeders, you know, I mean, the feeder cattle index is consistently higher than the futures in the nearbys. And, you know, we look at futures closed this week at 152.95, and you look out at the tail end of this year, you look at most of next year, and live cattle futures are trading sub 110. I mean, 108, 106. Corn's got to be awfully cheap to make that pencil, doesn't it, Elaine?
Corn is awfully cheap.
Okay.
There's lots of it.
So, I mean, there's some rationale behind this. We're seeing returns coming back for cattle feeders today.
Yeah.
They're reinvesting in those feeders.
There's kind of profit everywhere in the industry right now, which is nice. It's a nice position to be in.
It is nice. And, you know, we've also talked quite a bit about, we were talking about demand, and you mentioned exports. And, of course, we saw China finally open up again. BSE hasn't scared them away, which is good.
Seems like when they want a thing, they want a thing. When they don't want a thing, these little details can be more impactful.
Right. They find a reason to use the news.
That's sweet.
So China's open. It's a small market so far. We've seen a couple loads go over. In your mind, what does this Chinese demand picture look like for U.S. beef, North American beef, over the next 1 to 2 years?
Isn't that fantastic to think about?
Is it fantastic? Do you think they're going to get a taste of it and step in and keep buying?
Think of the way that they have changed, how quickly their diet has changed, even to chicken products. You know, how many KFC stores are there in China? I don't know, but it's a large number.
Yeah.
And to the degree that we could get them stepping up this protein ladder to our beautiful beef products, I think there's so many people in Asia that if that becomes a large popular part of their diet, I don't think that the Chinese agriculture sector, to my knowledge, is in a position to supply that. So we get to supply it, which is outstanding. I think I'm very bullish about that factor.
It's a lot more fun to send DDGs to China in a well-marbled ribeye than it is as a co-product.
Well said, yes.
Yeah. Well, so that's cattle. You're fairly bullish on the market as we look out.
Long term, not on Monday, but yes, long
Monday's
term.
Monday's going to be unattractive.
Yeah.
And, looking at a report like we saw, we understand it's drought related. Let's assume it's an ugly day on Monday. How long do you think before it starts to turn around? I mean, because we do have fairly strong fundamentals, absent this shock.
Well, yeah, I hope that the traders in the market in general understand that was a story in June.
Right.
And that play has already been made. All of those cattle have already been flushed through. And so now actually the supply will become tighter in your July, August, September sort of numbers. So if that is understood, then it should be just a very brief bearish reaction and then recover fairly quickly.
Maybe a buying opportunity.
Fingers crossed.
Come Monday or Tuesday. Yeah. All right. Now we do have a couple questions from our Twitter followers. And this first question kind of relates to that a little bit. This is from Dan in Prairie City, Iowa. He's on Twitter at DanDV3. Thank you, Dan. Dan says, with the markets being electronic, why can't we get a full CFTC report, get a full commitment of traders report daily so the market can trade that information sooner?
Wouldn't that be awesome? But let's take the question a step further. Why couldn't we do it every 5 minutes? Why couldn't we do it every 10 minutes? If it's all electronic, it could. Of course it could be done. They could have done it before. You could have had people counting up their pencil marks at the end of every day, and the CFTC could have released them daily all along. I suspect, I mean, I'm not a member of the CFTC, but I suspect the reasoning behind it is probably a privacy issue. If you did it every 5 minutes, it would be perhaps easier to sort of track down who was doing what. They wouldn't want that. I suspect that's why, or perhaps just the resources. Somebody has to run these reports, and I don't honestly know the answer, but I'm just saying that there's nothing specifically magical about a weekly interval compared to a daily interval compared to a 5-minute interval.
Right, or real time, which we could do.
Yeah.
But that's a good point about if I'm a large either commercial or spec, and I launch a large order, and then they report 5 minutes later, you could track it down pretty quickly.
I would think so, yeah.
Well, now Dan had a second question for you, and I think this one's interesting to think about, especially as we look ahead at the crop conditions crop progress report due on Monday. With December 2017 corn trading 60 cents above last year at this time, is the yield reduction already factored in?
I saw Dan's question on Twitter, and this is the question, right? So I spent some time looking this up because I wouldn't have even been able to say what the prices were last year compared to now. And it's actually more like 50 cents instead of 60 cents. But on
That was an ugly day on Friday.
Right. On July 21st of 2016, it was 50 cents, lower than it is today. But
D's to D's.
D's to D's. But opportunity-wise, last year there was that opportunity in June to sell at like $4.50, and the best opportunity we've had this year was $4.17. So I hope we have at least that opportunity again, maybe a better opportunity, but it sort of throws into light how odd that $4.50 opportunity ever was on 2016. I don't think that mystery has ever been solved, but I mean, nobody minds.
Right, yeah. I mean, as long as you got some sales on the books, that was okay.
Yeah, so what was I probably didn't answer the question.
Is the yield reduction already factored in? What's your yield as you look ahead to this year? Do you have one figured out yet, or is it still too early when you're looking at this corn crop?
I don't know. I mean, somebody could, and I mean, the satellite data is certainly, somebody knows.
And I think Informa came out with 166 and change, I believe.
Okay, and I would just say, like, even you think Iowa, Illinois, they're not going to have record-breaking yields either, because things are not perfect. There was never a perfect start to the season. This is not a good time to be having heat stress and dry stress in the center of the Corn Belt. Plus, you take out a significant portion of production in South Dakota and North Dakota. It's not entirely trivial. So I think nationwide, we could kiss 14 billion bushels goodbye. That I don't think is going to happen.
Okay.
But has it already priced in? I don't know. I think we talked about that on the show too, is that this is really the decision point. It really depends on how Iowa, Illinois, Nebraska, Missouri, how that corn fares in the dry, hot weather of August.
Right, after so many deluges,
yeah, that sounds right.
Yeah, whatever.
Spell it.
Multiple droppings of lots of rain in the eastern Corn Belt, Indiana, Ohio. They've been saturated. I had a conversation with a guy who oversees a lot of agronomists, and I was asking. It was yesterday. I said, "Hey, 101 degrees. My neighbor's corn is pollinating. What does this mean?" And he said, this is going to be the first time, and agronomists, if you're listening, please let me know if you disagree or if you've got other research. He said this is the first time we are going to be able to test and see what heat stress, this kind of extreme heat stress can do without it being a dry heat, high humid heat stress over a large portion of the Corn Belt in history. This is the first time we'll be watching it.
It did happen in 2012.
Yes, but it was so dry. We've got still a lot of
hybrids are so resilient. So this is why I'm not looking at $5. I'm not, wildly bullish on it. We still have a lot of grain to work through. So I don't want to give that impression, but I don't think we have a record-breaking crop by any means.
All right. Well, Elaine Kub, before we let you go, we do have a question from a student up at Iowa State University. We encourage all of you students to send in your questions via Facebook and Twitter. Just flip out your phone, or don't flip it out anymore. Of course, we don't do that. Get out your fancy phone and shoot a little video, send us a question. And if you want to learn more before you send us a video, you can check out the M2M podcast number 143. So, Elaine, here is the latest installment of our college-level ag student questions.
So as a student, should I be looking at getting my Series 3 license for trading?
That's a good question, and I think there's a lot to be said for studying for it as a student. Certainly, the material is not beyond. I mean, it's certainly material that a college student should be able to master and probably do quite well at. You know, it's about your futures and options theory and about the regulations of it. And some of this, if you took perhaps an ag econ class or something, this is a perfect time. And that's probably one of the best arguments for studying for your Series 3 now, is that if you have questions, you have your ag econ professor right there to go ask questions for, rather than you trying to hash this out later in your career. However, I think to actually get the Series 3, you need to be sponsored by a company that has licenses and has associated persons. So you'll run into that logistical problem of actually physically taking the test. But as far as studying for the test and mastering the material, college is a perfectly wonderful time to do it.
Sure. And then you can go for a job interview or an internship interview and say, hey, I've already done the research. I need a sponsor. And maybe you'll have an in.
Yeah, absolutely.
All right. Well, Elaine Kub, you always provide so much to think about. We appreciate it when you're on the program. Thanks for taking the time this week.
Thank you for having me on.
And join us again next week when Ted Seifert will sit across from me at the market-to-market table, and we'll look at how Kansas ranchers are rebuilding the dream after catastrophic fires. Until then, thanks for watching or listening. I'm Mike Pearson. Have a great week.